Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Friday, July 9th, 2010. Well, here we go again, folks, another intraday video, and I want to dissect the market not only on an intraday basis, but also look back at the previous week to decipher the key calls that we've made and show you how we made them. And again, that is a very, very important point about these videos, the educational side, based on the turn date that we called for starting on Tuesday. Again, Monday the markets were closed. Tuesday we had a turn date for the markets to reverse to the upside, and 5% later, here we sit, folks. Again, 5% gain in 4 trading days essentially after the turn date call. The turn date call went to our premium subscribers in the research center and in the intraday stock chat over a week ago. Basically, we alerted them to it about a week and a half ago, multiple days in a row, telling them about the 6th of July. 6th of July was going to be the pivot point, and again, look for upside off of that. We picked up various positions, whether it was the RTH, the retailers, whether it was JP Morgan, whether it was Tesla, TSLA, multiple positions picked up in accordance with that turn date, and we've sold them, made beautiful profits across this week. It's been a tremendous 4-day trading week, considering the volume is generally light on this holiday following week from the July 4th holiday. Generally a fantastic week, and I have to say, we'll hope for another great week next week, and I'm sure we'll have it. Now, again, markets today, as you can see, markets very, very quiet overall in the intraday period. Volume is basically as light as we've seen it since the downturn started. If I flip to the daily chart, you can see today's volume. Look at today's volume. It's almost 2 o'clock today, almost 2 p.m. It's about 20 minutes till 2 p.m. Eastern time, and this market is doing minute volume. I expect this to be the lightest trading day in probably, let's see, probably going all the way back to April. I think we'll rival April volume, which is a long, long time ago, really when the market was pivoting to a high. And that is something we need to be concerned with if we're looking on the daily chart here, because also you see the market hit the 20 moving average today. Now, I want to just go back to the intraday chart. We were going to focus mostly on the intraday, and I'm going to shrink the chart down so we can see multiple days on the 10-minute. Now, if we go back to last week, here's the 1st of July, 2nd of July. This was the Friday, and then again, Tuesday, Wednesday, Thursday, as Monday was closed. Tuesday, Wednesday, Thursday, and today being Friday. You can see that, again, here we had on that 1st of July a big drop and then a comeback in the markets, and again a drop on the following Friday, but then we rallied back and still had a little bit of a down day on Friday before the weekend holiday session, as a lot of people didn't want to hold the positions into the weekend, the long weekend, the 3-day weekend of July 4th. But again, the turn date was right here. This was your turn date, folks, and no sooner had we nailed it, and again, this is us accumulating long positions over these last 2 days going into the end of the week. Sure enough, the gap up reversal, then we squeeze into the close, and then the rest is history, folks. The market has just soared since then, and our target, this was the key. Where did you think the market was going to go? Well, we told our members again to look for the 107.50 to 108 level. And again, guess what the high of the day was today? 107.69, right in between that 107.50 and 108 level. And the key, again, understanding is you have to look at the bigger time frames. If we flip to the 60-minute chart, and here's the 60-minute, look at this level here, folks. See the gap fill going back to the 28th and also the 200 moving average? This is 107.50 and this is 108. And notice the market peaked right here above the 107.50 and hasn't been able to get above that gap fill. That's a very, very important level right here in the markets. And again, this is the completion of what the turn date was supposed to give us in the short term. Now, we may see a little bit more upside, but you're going to look for a little bit of a pause or pullback. We're already starting to get the pause today as the markets are just going sideways, consolidating off of that move. And again, be aware that there's a lot of resistance right up here on the 60-minute chart. You can see it beautifully at 107.50 to 108. Now, if we go back again, what I really liked about this market movement today was how dramatic it was. We had just a huge amount of upside push kind of activity here ever since this reversal. And this reversal on Tuesday was very important. We isolated it as it was happening. And again, just keep in mind, when the market was trading down to 101, 102 area, everyone was ready to jump out a window. And I looked across the media. You know, you have all these gurus on TV, and you go across to the average person. Everyone was thinking, oh, market's going to crash, blah, 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 blah. Here we are, chief market strategist in the money stocks saying, no, guys, look for a reversal. In addition, what I loved was the daily chart. If we flip to the daily chart, you had a beautiful head and shoulders pattern here. Shoulder, head, and shoulder. And we broke down below that, meaning the head and shoulder was in play. You broke below this neckline when you traded down here. And again, we said this to our members. We said, guys, we think this pattern is going to fail. Why? Because the media had alerted everyone to it. And again, you have to remember that, folks. The media is telling everyone that this pattern is in play. That means downside is making everyone even more bearish. As soon as the media is telling everyone, the amateurs are going to be on board, and you know the amateurs and the retail investor do not make money generally in the market. So again, that was a perfect situation to not only go right into our turn date, but also notice that the pattern had broken here. Granted, it looked like it was in play, but it was most likely a failure based on our calculations. Sure enough, the pattern has failed now as we've rallied all the way up. 5% gain in this market, taking us back up, and that's a beautiful turn date nailed. Beautiful calling for a negation of a head and shoulder pattern right here, which actually happened as well. And again, all it is about is just making profits consistently, folks, and that's what we're here to do. I'm not looking for a home run every trade. I'm looking for singles, doubles, triples, and the occasional home run. Put it back to back. 8 to 9 winners out of every 10. 80 to 90% success rate per trade on the trades. And again, that's what it comes down to. So month after month after month, you look at your portfolio, you see constant gains. And again, that's what I do when I look at my portfolio, and our members do as well. All right, now again, folks, beautiful move up. And again, just notice this on Tuesday. Here's the Tuesday gap up on our turn date, and then the drop. And this drop went from a major gap up to turning the markets negative before that late day push in the last 20 minutes of the day. And again, I can zoom in a little bit more on it so you can see it a little better. Here's the gap up and the reversal, and then we went negative here and rallied back. This was a classic flush by institutions. Classic flush by institutions, basically alerting people to the fact that this is not going to be that easy. And what they were doing here is by flushing the market to the negative side, taking out weak hands, the amateurs, and stopping them out. And again, that's a classic activity. And then notice how the rally at the end, this is all institutional accumulation down here, and then the market just took off to the upside and continued on. All right, you got to understand the rules here, folks. And again, best thing I can say is join the chat room or join the Research Center. Research Center, $49.99 a month. You get trades literally just this week alone, 3 or 4 easy swing trades for massive amounts of money. You should be making 10 times in one trade if you do decent size, or even 10 times in all the trades, just the money for the Research Center alone. I mean, and that's just, we're just talking about the calls, not alone the videos, the 40-minute videos nightly, the daily market report, which has key levels for oil and gold and the S&P and the 10-year. I mean, so much in there. You can go check it out. It's all included for $49.99. In any case, folks, go join. I look forward to seeing you. Have a wonderful weekend. I'll give a weekend update over the weekend as well. And again, we're going to continue to nail this market next week. Take care.